Okay, so to pick up where we kind of left off, and I know after listening for 60, 70 minutes, everyone's eyes glazed over. So the question is, if I'm traveling in the country, I can allocate the cost of my travel, right? If I'm doing some pleasure and some business. If I'm traveling outside of the country, I'm not going to get any travel costs if there's if it's primarily for pleasure. And I've got to allocate if it's primarily for business. So that's really the first question, is how do you split up the to and from costs? Once you're there, it's always allocable, whether it's, Mississippi or Milan, it's always allocable between your hotel, your reservation, or your transportation, your meals and entertainment, right? Okay. So that's if you hold on to all your receipts. Now, the example I was giving you is I've got a guy that's in a band, and they traveled around Europe the last couple summers, right? So being a classic musician or typical musician, not so very much keeping track of all the receipts, right? So he's got the option of going per diem. Now, if you travel for your employer, in other words, you're right here, these are the two methods that are available to you. You can take a federal rate that's the same no matter where you go, except for a couple that are, no, that's the second one, sorry. The first one is every single place that you go has got its own rate. And that's really onerous to look up. I've got a gal that travels to trade shows, she's an artist. You've got to look up, Portland's different from Spokane, is different from Boise, is different from, So that's time intensive to look that up. The second method is everything's considered a low area unless it's specified as a high cost area. And then there's different rates. In high areas, there's executives that think they would be executives don't have down places like that. Okay? And whatever the rates are that they give you, part of that 185 or 275 on the bottom one, part of that is meals and part of that is lodging, and the part that's meals, you've still got to do what with? Multiply by 50%. In other words, they say, in a low-cost area, your meals are, you get $55 a day, let's say. Did you get that whole $55 a day? No, times 50%. Okay. If you're self-employed, your only option is this guy, M&IE, meals and incidental expenses. And incidentals are things like getting your laundry done, or taking a taxi, or tips. If you travel a lot for business, particularly on the East Coast, where you tip the doorman that opens the door for you, and you tip the guy that hails the cab, and you tip the guy that, it gets to be, you're not going to be recording all that. Right? So that's where this comes in. But you've still got to keep your actual lodging. Right? And again, it's the same. Everything's considered a low area except for a few that are high, and then you get the 68. So the way that you get these tables or these rates is it's in, you go to irs.gov, in forms and publications, and just type in per diem, and it'll give you the name of the publication that has the rates. And sometimes they update during the year based upon like inflationary or deflationary pressures.
So I have a question on the per diem on the previous slide. Now, I as an employee have traveled for work before, and I've been giving up per diem rates for this. Now, am I supposed to, as an employee, supposed to claim those on my taxes?
Those are going to show up on your W-2 if you don't have an accountable plan at work.
Okay, now, so it's the accountable.
If it shows up, that's a really good question.
It doesn't show up, and I've never claimed them because,
because they're paying for it.
Right.
So that's a really good teaching point. So if you travel on behalf of your business and they don't have an accountable plan in place, you guys remember what that is from payroll? They don't have a plan that's compliant with the Internal Revenue Code for reimbursing employee expenses, the city would. But, if I'm working for Joe Schmo, I might not, right? Then it's got to show up on your W-2. I gave Lisa $1,236 in reimbursement, so and then my wages are say $30,000. So, my W-2 says this. I didn't really earn that $1,236. It was reimbursement for business travel. Then certainly I'm going to go down and claim that on my Schedule A, right? That's $1,236. But you only get the part of it that's greater than 2% of AGI. So you're not going to get all of it. So if you work for somebody and they don't have an accountable plan, it's a bad thing for you.
You're basically giving away money to your boss.
Yeah, well, you're losing a deduction. And what if I don't file a Schedule A?
Just take the standard deduction.
Yeah, then I don't get it at all, and I've got taxable income. That's not really income, it was a reimbursement for travel.
So even the choice is always better to not.
But you gotta ask them straight away, do you have an accountable plan? And a lot of employers are gonna go, oh, what? And then you just print out a template that you can Google. It's a one-page thing that just has, it says the officer and the officers or the board of directors or whatever, based on what kind of entity it is, just has to sign off and say, we have a plan that's compliant with the Internal Revenue Code.
So my job is to gymnastics and the business travel, and they get reimbursed by a booster club. So since they're a nonprofit, the business is not really about it at all.
Oh, that's interesting.
Yeah.
Not particularly legit, but I don't think anybody's worried that gymnastics coaches are living the high life.
Yeah, so they turn in their receipts to the booster club.
I would just on that. It's not who's tracking.
Yeah.
Yeah. Not particularly a legit
That's where I'm doing my
situation.
internship. I was just reading that
It's technically compensation.
everything
Nobody's gonna track that. Well, unless, the boosters are, they have to file a 990, which is a nonprofit tax return, which anybody can go see. We're coming for you, Katie, is all I gotta say.
Me.
Oh, you said it's not needy, yeah, okay.
Good answer.
Yeah, so, and just FYI, you guys will learn this, or maybe already did learn it in nonprofit, but if you want to know who donates to an organization or where your money goes if you're considering donating to an organization, or you want to get involved with a nonprofit, if you go to guidestar.org, every nonprofit's 990 is released to the public. So you can go see, just this last week, I had a gal in my sustainability class that showed me a report by this group called the National Association of Scholars that disputes a lot of science. And first off, scholars don't call themselves the National Association of Scholars. That was my first red flag. I go on the 990, and in 5 minutes I could see they have one donor, Sarah Skate Foundation, niece of one of the Koch brothers. So, okay, it's pretty easy to track. This is not a nonprofit that's comprised of scholars. It's got one major donor. So, anyways, it's really helpful for understanding where research comes from, where your money goes. It's got to show like what percentage of incoming revenue is spent on admin versus programs. If you're interested in donating to hurricane victims or whatever, do your due diligence and make sure that where your money goes.
What's the website?
Guidestar.org. And they're going to try and get you to subscribe and blah, 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 and just say, no, I want the simple or the entry level or whatever, the free one. And it's got the salaries of all the top, I think, 10 compensated people in any nonprofit is on there. Yeah, no, it's absolutely awesome information. Okay, entertainment, we talked about this, 50%. It's got to be directly before or after some sort of business meeting. And that's all I've got to say about that. I mean, this is obviously a pretty abused area. You get 50% of them. You've got to document who you were getting entertained with, what the business purpose was. Two things required.
When you say document, are you saying document and then hold for your records or document?
Yeah, like I get a
and
receipt.
return?
I just went to the J-Lo show in Vegas after a business dinner, and I document, potential clients, from such and such a company, and I hold on to the receipt.
Okay. 7 years?
Well, yeah, 3 if you don't have any issues, 7 if there's going to be potential malfeasance. So
So if you're playing fast and loose, hold
it
yourself.
is 7, yeah. I mean, I hold on to all my clients' tax returns for 7 years. And then every April 15th, I have a big bonfire in my backyard and I throw out everything from 7 years prior. Huh? I don't. I have a big fire. It's very cathartic. Okay, educational expenses. This gets pretty woolly pretty quickly. I think we've already looked at the fact that you can have education credits. Right? And it's split into 2 places in the tax return. On the front of the tax return, there's a tuition and fees deduction for AGI. Okay? There's a lifetime learning credit, which we haven't even looked at yet. So, for example, I'm taking a Spanish class, I can still write off 20%, get a credit for 20% of the cost of that, right? Continuing ed. So this is talking about more continuing education. So let's see, how do I differentiate that? So continuing education is nurses have to get X amount of hours a year. CPAs have to get X amount of hours a year. Attorneys have to do that. Engineers have to do that. Architects have to do that. A lot of professionals have to do that, right? That's different from I'm going to get a degree on this bottom bullet that's going to lead me to be qualified in a new trade or business. Okay? So what we're talking about here is continuing ed. So cost of courses, they like the CPE that we have to do generally runs between $60 and $100 an hour, and we have to do 40 hours of it a year. So and it's pricey. So that's the cost of your course. Now, if you travel to it, then you get your lodging costs, you get your plane ticket, you get 50% of your meals and entertainment. But again, the travel's got to be primarily to obtain the qualifying education. And of course, lots of CPE organizations now tie in like, oh, you need to come to the Caribbean to get your CPE, although that's probably not going to be such a hot destination this year. Footage from Puerto Rico is shocking, absolutely shocking. It must be, your continuing ed must be, this is for it to be deductible, must be paid to meet the requirements of the taxpayer's employer or to comply with laws and regulations to maintain or improve existing skills. So what this is saying, like, for example, if I went to law school, would I be able to deduct those costs as continuing education?
No.
No, because it would qualify me to be in a new trade or business. But obviously all my CPE is deductible. Now, again, where am I taking my CPE? Am I taking it to my Schedule C or my Schedule A? Because I can put it either place. C because?
Because of the tax.
Which tax? I don't have to pay self-employment. Every dollar of CPE that I push to my Schedule C reduces my tax bill by 15.3 times 0.9235, right? So anything, if you do the same thing roughly for your employer as you do in your self-employed gig and you incur expenses, technically you're supposed to allocate them, but really, realistically, you're going to push over here. So Roberta is a paralegal. She goes to law school at night. Are her educational expenses deductible? Yay or nay? Does it qualify? Should it be something different? A paralegal and an attorney are not the same thing. Okay. What if Roberta flew from her home in El Paso to a continuing ed conference for paralegals in Dallas, 30 years per year of continuing ed required for paralegals in Texas? Then for sure you get it, right? See the difference? Okay, now this is on the other side of the stool, and you've seen this. Educator expenses, K through 12. Spend money out of your own pocket going to the classroom. Up to $250, and does that go on your C or your A? Huh? Where did that go? That was our very first gal. It's a deduction for AGI, so I don't have to itemize to get it. I don't have to be self-employed to get it. Everybody gets it. Oh gosh, it's funny. This didn't really sink in. After many years of expirations and last-minute extensions, this deduction has been made permanent and will be indexed annually for inflation.
It will go up. Question, if the educational expense, like tuition and stuff, is reimbursed by the employer, how does that change it?
Same thing here. If it shows up on your W-2, then you're going to write it off. If it doesn't show up on your W-2, you don't write it off. Do they have an accountable or non-accountable plan? So that's always the question. Should you have any tax implications if your employer reimburses you for tuition? No. I paid $3,000 out, my employer gave me $3,000. Lots of programs, like I know, like what they have at the youth homes, is they give you a percentage of reimbursement based on your grade. So yeah, you go and you take a class and get an A, you get 100%. You get a B, you get 80%, so on and so forth. So in that case, you write off the portion that you had to pay out of pocket, right?
So you do allocate that.
Mm-hmm. So the question is always, just think about it like this. If this was my education reimbursement and showed up on my W-2, I should technically get a write-off to wash, right? Because that's not income to me. So that's always your question. Dues, subscriptions, and publications, really nothing to say here. On the first bullet, you get your technical journals, all your related materials, access to any, online or digital materials you need to do your job. And then dues paid to a civic or public organization like Kiwanis or the Lions or the Moose or any of the other animal clubs. Yeah, all that stuff. It's only deductible if the club does significant service work. So if the primary purpose, like the Lions or the Sir Optimus, is service work, then you can deduct your dues. So if I'm a member of Kiwanis and I pay $100 a year dues, they do significant service work. I can deduct that on my Schedule C. And I can also deduct stuff like my dues, I can't, but dues to like Costco, because I go get all my office supplies at, discounted volume, discount price.
If you're a finance or accounting, Wall Street Journal, accounting,
Sure.
Journal, could that-
Absolutely. Yep. Special clothing, you get to write off your uniforms if they're required as a condition of employment and you can't wear them outside of work. So for example, like your scrubs if you're in the medical field. I'm using my voice officially. And protective wear. So anybody that's, works in the forest or construction or anything hard hats, safety boots. And then you can also deduct the laundering and repair and alteration and all that. Okay, business gifts, this is really highly regulated. They don't want you, so Janet's a potential client or partner, and I give her a gift of $5,000 at Christmas. Okay, the IRS is not going to let me write that off. They say, really, you're compensating her. That needs to have payroll taxes taken on it and a W-2 cut or a 1099, whatever the case may be. So it's really limited, $25 per donee per year plus, I think, cost of wrapping paper or shipping or something.
Wrap it up as an adult.
Yeah. Husband and wife equal one donee, and this is really limited. And we've already talked about that, I don't know why that's here again. I guess that's a gift to an employee. $400 you can write off if you give to somebody property, something you can touch. That's for length of service or safety, or up to $1,600 if I have a plan.
Can you back in there?
Yeah.
No limitation for small business gives up to $4 each.
And so that's like I've got some stupid little plastic tchotchke with my name on it because I'm a realtor.
But if there's no limit, once people can throw a couple hundred of these $4 gifts or something.
Why would somebody want a couple hundred flashlights with my name on it?
Also, $1 flashlight is $3.
It's too bad. I guess you could. I think that the whole spirit. Okay, and then this is what they want to see if they come in and ask for hard copies or receipts, is some sort of identification of the business purpose, business relationship. So, I mean, not that I do much of this, but 3 or 4 times a year, maybe I go out to dinner with one of my tax clients. I have some that I actually deliver the tax returns to in person. I'll meet with them after dinner and a glass of wine. Then I write, business purpose, delivery and discussion of tax return, business relationship, client, you gotta write all that in the back of your receipt. Okay, so I think that's it. Oh, no. Okay, this is actually important. This is a tough one to explain to clients. So, cash basis taxpayer. I make jewelry, and I sold a bunch of jewelry to Rock and Rudy's. That's not fair. They don't do that, but yeah, some little shop here in Missoula, and they don't pay me. Okay. Do I have a write-off? No, because did I ever record the revenue? No. So what happens to the cost of all the stuff that I put into the jewelry? Well, that goes to cost of goods sold. Because that's not my ending inventory. So you didn't record any revenue, right? Because you never got the cash. So you can't write the bad debt of the fair market value of the jewelry off against that, because you're not accrual. And the actual cost of the semi-precious gems and the tiger tail wire and all the stuff that goes into making my jewelry was expense to cost of goods sold. So I've lost the value of my labor, right, the conversion of the raw materials into the finished product. But that's just what it is. This is a really tough one to explain to clients.
So they just out the money.
They're not out the investment in the raw materials because that's flow through costs. They're out the value of their labor.
What they put in.
Okay. Yeah,
So where do they write that up?
they don't write that.
So
So I'm saying they're out the value of their labor. They don't write that off.
So if you turn it over to collections, and collections only returns a percentage of that, and the uncollected percentage you still lose, but if you were doing it by the accrual method, that collected percentage would be right.
If you're doing it by the accrual method, you get the bad debts, the full bad debts, because you recorded the accrued revenues. I sold you $600 worth of jewelry. If I'm an accrual, that's already gone through revenue, so I get the whole $600. It doesn't matter. And then anything I recoup would be just a lower revenue.
Okay, good.
Yeah. Because accrual, you would get the whole amount. Then the question is, let's see. Okay. Proof of worthlessness, I mean,
That's my mom.
that's basically, I mean, that's, I don't know, bankruptcy, or I'm not going to pay you, or the phone is disconnected. This is important, though, that you have to make this differentiation between business and non-business. So business debt is what I just described. I sell jewelry, one of my clients took me. A non-business bad debt is, my nephew's girlfriend wants to start a hair salon, and she's like, can I borrow $5,000? And I borrow her $5,000, I lend her $5,000, and then she's like, nah, not such a great idea, I can't pay you back. I'm not in the business of lending money to start up hair salons, therefore, that $10,000 is a non-business bad debt. That's a Schedule D loss. And we need to take a look at that probably on a Schedule D because it's a little bit weird to record, and I think we've got one coming up in one of our cases.
If you pay it back with interest, would the interest on Schedule D as well?
No, interest would be a B revenue. All right, let's just take a look. So oops. No, I don't want the instructions, I just want the form. Here, where's just a regular old Schedule D? Okay, so non-business bad debts are, first off, just like anything, short-term or long-term, right? Have you owed me the money more or less than 12 months? Let's see, sorry. You can see line 1A, it comes, everything, now we've got this backup form to Schedule Ds called an 8949, which is kind of newish. We've only had those for a couple of years. Doesn't even look like anything can go straight on the D anymore. Okay. It's gonna be a little trickier to show you than I thought. Okay, but you need to know this because this is the reality of how we report capital transactions now. So really a Schedule D is no longer a form of original entry. In other words, it's got to have a backup schedule that comes into it. And you can have a whole bunch of these, and let me show you why. Up here, you can have short-term transactions reported on a 1099-B showing basis. What the heck does that all mean? First off, short-term transaction is one that what? If you own the asset less than 12 months. What does that mean, reported on a 1099-B? But have I talked about what a 1099-B is? I think I have. It's just like a 1099 NIS or a 1099 DIV or a 1099 INT, but this is the form that reports any sort of proceeds. So anything from I sell my fourplex, to I sell my house, to I sell my gold bars, to I sell some stocks and bonds, I'm going to get a 1099-B.
How's that different from capital gains distribution?
A CGD comes from a mutual fund. This is for sale of any asset. Capital gain distribution comes through a DIV.
So is interest in there as well?
Interest is not in here. Interest would come separately on a 1099 INT. So I guess without getting too deep into this right at this point, you can have an 8949 for short-term transactions that came on a B that showed basis. What the heck does that mean?
What is the social?
Yeah. Basis is a fancy word for cost, right? Basis, $1,000, selling price 2,500, gain of 15, right? So all your 1099-Bs where they gave the IRS basis shows up there. B, you need a separate 8949 for all short-term transactions that came on a 1099-B but didn't have any basis reported. And you need a third one for all your short-term transactions that you never got a 1099-D at all for it. Okay? And then the same for long term. So I guess you could actually technically have up to 689, 49, 60 in your deed. You don't usually. But what I wanted to show you was how you enter a non-business bad debt. Description of property. Non-business bad debt. Date acquired. That's going to be the date that I made the loan to my nephew's girlfriend. The date it was sold or disposed of is the date that it became worthless. Proceeds, how much did I get for it? Nothing, zero. I got zero for it. That's why it's there. Cost or other basis, how much did I lend them? 5,000. Gain or loss out on column H? 5,000. How much can I deduct? 3,000. Carry forward to 2. Assuming I have no other capital transactions. Okay?
So next year, would you fill us out to?
No, good question. Next year, Janice, I'm just going to have a, and your software does this, but I'm just weird enough that in the front of all of my tax files, I've got a worksheet that tracks everybody's carry forwards, because, I mean, you can carry forward lots of things. Where the heck is that? Did I just miss that? Oh, yeah, line 14, thank you. Long-term capital loss, carry forward. This is the amount that came in from prior year. And like, I've got clients that have huge numbers in there, you know, $396,000. Like I sold my business for a big loss, right? I mean, my dad died with a $500,000 capital loss carryover. That's just gone. Nobody ever gets that. I mean, he just took a huge hit back in the 70s in the stock market. You never, I mean, you just lose your loss because you only get $3,000 a year, right? Okay. Probably part of the reason that I had instilled in me a healthy fear of gambling of any sort. Okay. Non-business bad debts, Schedule D, $3,000 a year. Keiko, a dentist, loans her friend Lars $20,000 to start an upholstery business. Subsequently, he can't pay her. Is this a business or a non-business bad debt? How much can Keiko deduct? Non-business, $3,000. What would you tell a client to that would be good tax planning if he or she was in this situation and needing probably to start paying for college for a kiddo in the next couple of years and was planning on doing it by selling some stocks? Absolutely, and again, this is where you add value. But you know that. I know you've got a kid starting college in 2 years. Hey, how are you planning on paying for your daughter's first year at Tulane? It's going to set you back $60,000 a year. And you tell me, oh, I'm going to sell some of my investment portfolio. How do I know you have an investment portfolio? Because you give me 1099 DIVs and 1099 INTs every year, right? So I'm going to add value as a CPA or as a tax preparer and say, dude, you just have incurred a $20,000 capital loss. Sell stocks that are going to generate a $20,000 capital gain this year. Don't wait till next year. Do it this year to offset, to get the benefit of that loss all in the current year. Yeah. And you don't have to defer your loss to future years. You get to take it all this year.
Question.
Yeah.
If the money that you loan, if the terms are longer than a year, then it basically goes bad after a year. Is it a long-term capital loss?
I actually have to look that up. There's something in the back of my head that says all non-business bad debts are treated as short. Oh, yeah. And it says right here, short-term capital loss. I actually have to look this up, but I'm 99% sure that all non-business bad debts are treated as short-term. Does it say that? Oh,
Business bad debts are short-term debt losses,
there you go.
which are netted against other.
And that's just as defined in the Internal Revenue Code. Okay, this is a pretty big topic. This is a really big topic. This is definitely a value-added topic. A lot of people don't know about it. They don't know it's a deduction that's available to them. And here's what it says. Nobody gets office and home except for these 4 bullets. Nobody gets, because it was really, really abused. Nobody gets office and home except for if, number 1, you use it regularly and exclusively as your principal place of doing business. So I'm a psychiatrist and I meet my clients, my patients, in my home office, my principal and exclusive place of doing business. Or I regularly manage my business or meet with clients there. So I'm a psychiatrist and I go around to, I don't know, schools and meet with kiddos, but I also meet with the parents at night at home. So it's not my exclusive place of business, but I regularly meet and manage my business there. Or it's a completely separate structure. I've got a construction client, a construction company, and then they've got a separate little cabin on their land that they run their construction business out of. Or it's something that I store my stuff in. I produce health supplements, and I bought a Quonset and I put it on my property and I store my inventory in it. I'm always going to be able to deduct that. Okay. It's got to be, if you're self-employed, it's easier to take. If you're an employee, you can take an office and home if your employer doesn't give you a regular place of business. Who would that, or a regular place to be? Who would that describe? Yeah, but if you're a contractor, you're over here.
Online,
Yeah, great.
computer.
Yeah, sure. I'm tech support. My headquarters is in Palo Alto.
Sonic.
Yeah, yeah, anything like that. I'm an employee, and I get a W-2, but I'm gonna be able to write off a home office. I can't write off my home office as an employee of the University of Montana, even though I use it a lot to do schoolwork, because I have an office here, right?
But you can't write it off your tax credit.
I write it off my tax benefits, which is more beneficial than these. Okay, how does that work? So, stick with me on this. So, maybe I'll do a little example on it. This little guy. So basically, first off, let's see what it says. Office and home cannot be used to generate a loss on your Schedule C, except for the allocable portion of mortgage interest and taxes. Does anybody off the cuff see why that is? Why can the allocable portion of my interest and taxes throw me into a loss, but nothing else? Where would interest and taxes go if I didn't have an office and home? Mortgage interest and property taxes, where would they go on my taxes? They would go to my Schedule A, wouldn't they? Exactly. So what they're saying here is things like repairs and maintenance on my house, right, or recarpeting it, or all the things I can allocate part of to my office and home. Those things can't throw me into a loss, but the interest and taxes I would get in totality anyways on my A, right? So let's take a look, couple things. First off, let's take a look at a Schedule C and see where this goes so that you know what we're talking about. And then we're going to, because this is going to be a big part of what you're doing this chapter. No, you definitely don't have to own the home. I've got a number of people that rent, and like I've got a guy that's a painter, house painter, and he rents his apartment, but he's got one room where he does all his billing, he actually stores his paint in there too. Hot mess, but we take that, a portion of his rent, his Northwest Energy bill, his garbage service, right?
So there needs to be like a central spot where.
It needs to be a separate room that's used exclusively for business. Again, is the IRS walking around checking this out? No. But like in my home office, it's a couch and a desk and all the other things you expect to see in an office. But if you have guests, you could pull up the couch to a bed, but you don't advertise that. But again, I've never really had an IRS agent knocking on my door. The next thing is nobody in most of our income levels get audited. I mean, you have to have done something incredibly red flaggish to even generate interest from an auditor, or you'd be one of the very rare people where they roll the dice, like the lottery, and your social security number gets chosen. And the odds of any of us, I think I'm speaking collectively, of ever getting audited is pretty nil.
What if you want a duplex, you live in one half of the duplex, the other half of the duplex, that is your business, does that count as an office and home?
No. Because to get office and home for rentals, that's a really good question. You have to have more than 750 hours a year in the business. So like if you have people trying to do this all the time, I've got, a fourplex and a trailer park, and I want to write off office and home, I want to do all that. Is real estate your business? No. Are you self-employed as a realtor? No. You've got investment property.
You don't have an office in your house to maintain those.
If you can prove that you got more than 750 hours a year into it, which you might if you've got a trailer park.
Where does a rental, like say, Airbnb come in on that?
Airbnb, you just record the revenue,
But
and then you write off the commensurate expenses. So your basement says 1/3 of your house, right? So you take all this actually does get kind of tricky, and I've got a couple people I do this on. So Airbnb, say you get a 1099 from Airbnb, I need $6,000 in rental revenue, renting out my basement, right?
isn't 1099 only if it's more than 200 transactions of $20,000 and $20,000?
$600. $600. I think you're the good.
You're right, but I've never gotten Airbnb.
And you roughly make more than $600 a year?
Well,
Oh, huh. Yeah, I get one.
from them?
Yeah.
Wow. I never got one.
So you take the rental revenue and you plug it in to your Schedule 5. Where do you put rental revenue? Schedule E. And then you say, well, 1/3 of my house is the Airbnb rental. So I get 1/3 of my utilities and my garbage and my water and my sewer times the number of days it was rented divided by 365. And then any supplies that are directly allocable. I bought soap and toilet paper and, towels and sheets. Okay. Where does office and home go? It goes right here on line 30. Pardon me. Expenses for business use of your home. Do not report these expenses elsewhere. Attach Form 8829 unless the simplified method is used. And the simplified method is just a flat $5 a square foot, right, of your office. So what we're going to be focusing on for the next 10 minutes, and then I'm going to let you work the next hour on your cases, is the 8829 itself. That's the office and home form. This form causes, for some reason, I think it's pretty straightforward, but causes students a lot of angst. So again, what I'm saying is that an 8829 can flow to where or where? Can flow to the C, and we just looked at that on line 30. And then we just had this whole other situation that Elizabeth was alluding to. She's like, yeah.
What?
If you're an employee,
Oh,
you know, it's gonna go, that's gonna go to the 2106 and then the 8. Right, because that's the employee business expense form. But I only get this if my employer doesn't provide me with some sort of other office option. Okay. 8829. So it's not as exciting as you might have imagined. I bizarrely enough love taxes. Okay. So the first part, I'm not going to walk line by line through this by any stretch, but the first part is just simply how big's your house and how big's your office, and that's your allocable percentage. It's got to be reasonable. I mean, I had a gal move out to one of these huge houses out on Blue Mountain and trying to tell me that, you know, her entire basement was a giant house, you know, 5,000 square foot house, and that the 1,900 square foot basement is her office. She can't, I mean, it cannot write off 45%. Those are the kinds of crazy red flag things that will get you audited even if you're not high income. And just FYI, when the IRS looks at, you know, working class folks like ourselves tax returns, they do it with this matrix or metrics called a DIF, discriminant indicator function or something like that. And it takes every number off all these lines and puts them into parameters of reasonableness. They don't disclose what those are, clearly. But everyone knows they're there. And if you've done taxes for a long time, you can look at something like that and be like, 45% of your house is office and home is going to get you kicked out. It's not going to meet the DIF. Now, that's not to say that people don't come to me. They do. I made $30,000 last year and I gave away 10 of it. Why? Well, I just recovered from cancer and this is my gift. Okay, we got receipts for everything. Have at it. You get a feeling for people. You know what I mean? So, I'm going to just get my picture sitting right there. So Carlos is a new client. He comes to me and he's like, I made $18,000 last year and I gave away 10 of it. It's like, really? How, you know, why? Or, you know, something, it does happen. It's just not very common. But, well, you know, what really happened is he gave his old trailer to his brother. Well, that's not a charitable deduction. It's got to go to a 501c3. So you see what I'm saying? You kind of get a feel for people. Part 2, you do your allowable deductions. Now, this is the critical part right here, you guys. There's 2 columns, direct expense and indirect expense. Where you put these is the whole game on an 8829. The only thing that goes into the direct expense column, and I mean, oftentimes you're not going to have anything here, is something that only pertains to the home office. So my construction client that has a separate cabin that they run their business out of, they've got a separate, what do you call it, line of energy or whatever, a panel that they can read their utility bill on, right? So that goes here for them. What do I do for my utilities?
Okay.
I put it over here in the indirect column, and then that percentage up above is multiplied by it. What can you take for utilities? Northwest Energy, sewer, garbage. You cannot take a landline. Water. Internet's not going to go in here because you don't want to allocate it. That's going to go in your Schedule C. Your internet's going to go straight to your Schedule C. So I put my, here's the guy, Elizabeth rents a house as a painter. He pays $800 a month for his rent. So his $9,600 goes over here, okay? times whatever the percentage is.
What if you build your own little cabin or shelf, like in the real estate?
Yeah, I've got a videographer, actually I've got two people that did just that, a videographer and a weaver. And the materials that go into that absolutely is going to be a direct expense. In a house, where you've got a room in a house, there's not usually very much that's in the direct expense. The only things I think I've had in 25 years in that house, in that column, is we put in all new windows one year, and the window in the office was a direct expense. All the rest of the other windows went to indirect. And I replaced the cabinets in the office. But otherwise, do you see what a great write-off this is? I mean, not that I do, but say if you have a gardener, repairs and maintenance. Say you've got somebody that shovels your snow, repairs and maintenance. Anything that goes into keeping your house up, right? Repairs and maintenance, indirect, I get 8.33% of it. Okay, it is all limited by that number you enter up here in line 8. In other words, so all that stuff times whatever your percentage is, whatever your percentage is, it can't throw you into a loss except for the interest and dividends. I'm sorry, except for the interest and taxes. You can also depreciate part of your home. I do not do this. And I tell my clients not to do this. Why? Anyone know? Why would I not want to depreciate?
If you sell it, it's going to be on the other side.
Bingo, it's going to be taxable gain when I sell my house. And up to $250,000 or $500,000 if you're married, it's tax-free when you sell your house. And a lot of people plan on selling their house, not until they have to, so say in their 70s or 80s. I don't want to be paying tax to get these little dinky write-offs now.
So they can't throw your business into a loss, but can it bring your profit?
Yep.
Down
And bring it down to zero. Bring it down to zero. And then whatever you don't use can be carried forward to subsequent years. Okay. And that's that last part, carryover of unallowed expenses to 2017. Honestly, for most people, this is just, a very broad statement, but for most of my clients that don't have enough income to eat up their whole office and home deduction, those carryovers have a tendency to grow. So I just got a little something that's going on in my house. Okay, so let's look at these then as they apply. This is what I just told you, 2 columns on the Form 8829 for office and home expenses, direct expenses and indirect expenses, or you can just go simplified, $5 a square foot. But I'll tell you, every time almost anybody I've ever run the numbers on, the simplified is less than the actual. Okay, so let's try this one. I don't know why these are showing up. Just a sec, I don't really necessarily want you to. Does that not just fill in then? Ugh, okay, well, just don't look at the solution. There's a what? Shape fill. Thank you. Okay, great. So, say that we've got a gal, Kitty, she's a part-time cartographer. Does part-time matter? No. Maintains an office in her home. She reads electronic apps and keeps client records. She allocates $12,000 in interest and taxes to her office and home and collects $11,000 in fees. Assuming no other business expenses, what is her current year OIH deduction? It's actually 12 because her only deductions are interest and taxes. So that can throw her into a loss, right? But she would get all that on her A anyways. Then I said, how would this change if she also allocated 2,500 maintenance and utilities? And would she have an OIH carried forward in the first or second scenario? What do you think? So first scenario, what's her deduction? 12,000. So her Schedule C is going to show a what? $1,000 loss. In the next scenario where she's got the 12 grand of interest and taxes plus the $2,500 in repairs, maintenance, and utilities, what's her write-off? 12,000. What's her carry forward? 2,500. Okay.
When you do that and you deduct it on this aspect and you've taken it off your principal or your interest and taxes, you have to deduct that amount when you do it on Schedule A.
I'm
You
sorry.
can't do it
Follow
both
that.
times.
One more time.
If you deduct mortgage and interest,
Oh, gotcha. No, okay, super important point, thank you. And you guys will have to do this. So if I give you, let's just try one of these. If I give you information as follows. So let's all work this together. My Schedule C revenue is 81,000. And I've got COGS equal to 49. I've got, I don't want to spend time on this, other equal to 25. And then here's my OIH info. I've got taxes, property taxes on my house were 3,500. I've got interest on my house of 4. My utilities equal 12. Oh, pardon me. And my repairs and maintenance equal 1,000. And my office is 10 by 10, and my house is 1,900 square feet. My question is, what does my Schedule C look like, and what goes on my Schedule A? Oop. So that's what I want you to work for me. What does my Schedule C look like? And what shows up from what I just did up here on my Schedule A? Tissue. Does any utilities or repairs and maintenance go to your A? No.
And why is that?
Because those are just personal expenses. Those aren't deductible in any situation, are they? What's that say? Okay, so you guys see what my cat scratchings are up here? So you have to do this first calc because we know that my office and home can't take me into a loss unless it was just those first two numbers, taxes and interest. Right? But, so I do that and I set that up. Then I have to go down and I have to look at all my office and home information, and you're gonna need to do this just on a scratch piece of paper to do your manual recaps for your cases. Then you look at it and say, you gotta do the, that 5.3 versus 94.7, which is my 100 square feet divided by 1900, my ratio of allocation, right? And then I just took the percentages and multiplied it out. The A is gonna get the non-office and home portion in totality. Anything that's not taxes and interest you don't get on your A because that's a personal non-deductible expense. If you were throwing, for example, like a Airbnb in here too, you'd have another column that says E. Right, and that would be the portion. Square footage wise times number of days of usage that would be allocable to your Airbnb, whatever. So the answer to the question was, what does this look like? This is going to be my office and home. So my Schedule C is going to be $64.85. And my schedule, so that's my self-employment income. And my A, I'm going to have deductions equal to $71.02. So like, if you're wondering, gosh, what's going to be on the test? This would be the kinds of things I'll ask on the test so that I know that you've got the interaction of lots of different kind of concepts. Okay. I'm not gonna talk about NOLs, which is the last 3 slides. Your eyes are gonna glaze over. I've had like 2 of them in 25 years of practice. Not super relevant. This happens all the time. This you need to be conversant with. So today we're gonna finish the last half hour or so with, did I ask you to have your manual recaps for 4 and 5 done?
Yeah, it's not very true.
The returns are due today. Okay, sorry. My notes to myself are a little vague on my daily plans. Yes, please. Yeah, returns are due. Those are chapter 2 returns. Right, and you're working on 6, 7, and 8. Okay.
And no recaps on.
Gotcha. All right. Do we need to talk about anything with 6 and 7 for the manual recaps? Have you started them? All right, well, let's dig into those. Bring up your tax returns, please, for chapter 2.
That's 4 and 5, right?
4 and 5. Sorry. Wait, they need to go in 2 files, please. Your name and client name on the front. You're fine, but can you staple them all together, please? I want just one packet. I was carrying these last week and they fell and things were all over the place. Let's see. I don't see that we have a stapler in here, so you're fine.